Our next guest believes that the S&P will reach 6,300 before the end of the year, but he also believes that we may be about to enter what he refers to as a zone of hesitation in the coming weeks. Tom Lee, the Chief Investment Officer of Fundstrat Capital and a CNBC contributor, is now joining us. Tom, it's nice to see you. There are 4 reasons why you still believe the S&P will continue to rise in December and reach 6,300 by the end of the year. But I want to talk to you about the bonds, the 10-year, later. Which 4 factors are involved? Seasonality is one of them. Historically, December has been a good month, but in an election year, when you're up over 10% in the first half, December has been up 100% of the time. The second is that yields have dropped to what they were before the election. The 10-year is at 4.1%, you know. For multiple expansion, that is advantageous. The third is that, despite the market's recent rally, sentiment has actually shifted negatively, which I believe has been unexpected. That seems like a contrarian bullish indication to me. Lastly, there are still those 2 puts, the Fed put and the Trump put, which, in my opinion, indicates that you should still purchase any of these dips. What steps can Trump take to ensure that the market continues to rise? I believe that his strong pro-business stance has been demonstrated by the cabinet nominations and recommendations he has made. Additionally, I believe that communication is still a strategy since, as many have stated, Trump is very focused on the stock market. It also serves as a hint that animal spirits can reappear. I'm not sure whether you follow the way the financial media sector covers tariffs, to put it politely. How, after all, can you call him pro-business when he supports tariffs, according to these people? Because if you watch the coverage on tariffs, you could think. Yes, I believe tariffs have been a useful negotiating instrument, and it serves as a reminder to me that it's good to have a heavy stick. Other nations have, in my opinion, taken some proactive steps, and the current White House generally doesn't seem to want to implement any measures that will reduce corporate profits. Therefore, I believe that whatever is done in the end will be beneficial to company. Okay, that's one man's perspective, so I hope everyone is paying attention. Every time we discuss the 10-year, the argument goes something like, it would be good this way, but it would be bad that way. Why doesn't it suggest that perhaps the economy isn't as robust as we believed, and that perhaps business profits won't hold up there if it is declining, which is excellent for multiple expansion? Additionally, whereas multiple expansion is occasionally accompanied by a slowdown in profit growth, although it's always difficult to determine what the bond market is saying us, it is a possibility. However, if we consider the next 6 to 12 months, and we know that the Fed intends to lower the cost of capital for small company owners and homeowners with mortgages, then the 10-year stay at these levels, or even a decline, is actually a relief of financial conditions. That's encouraging to me. Do you believe Vivek Ramaswamy and Elon Musk can actually make progress with this? And would that contribute to economic growth in a positive way or negatively? Because you're spending less when you lay off employees. Well, I'm glad someone is looking closely at these. According to Bernie Sanders, it was fantastic. That's correct, indeed. Additionally, since these are really expensive things, I would really like to see someone pinpoint any areas where there might be waste. Is that detrimental to the economy? I believe that the majority of people consider government expenditure to be the least effective use of capital. Therefore, I would rather that the private sector reinvest that money if government spending is cut, and it has been displacing private sector investment. That would, in my opinion, be really important overall. The game is zero-sum. Many people would use any available funds, whether from the government or other sources, to boost the economy. Yes, you believe that if the government doesn't spend it, it will move into private hands. That's correct, indeed. Since government spending competes with private sector funding, I believe that would free up funds. The private sector investing this money at a higher rate of return is what I would want. Therefore, I believe it would be beneficial for GDP, earnings, and stocks overall. Do you want to? Before we release you, we all want to hear your thoughts on Bitcoin. Usually, it became stuck below 100. That's pretty. I suppose it's on a psychological level. Yes, I believe that a large number of people may not want Bitcoin to surpass 100,000, and that exchanges themselves may be worried due to the relatively little amount of Bitcoin that is available over the counter. There is a shortage of supply, and I believe there will be a fierce chase if Bitcoin moves above 100,000. Therefore, I am optimistic that Bitcoin will conclude significantly higher before the year ends. Before the end of the year? Yes, before the year ends. So before the year ends, break $100,000? Yes, well over 100,000 before the end of the year. Only a matter of time will pass. Tom, it's not that long, it's December 2nd. Thus, it will complete the task during the upcoming 4 weeks. Tom takes risks. You're crazy, I know, and they typically do come true. A roll, you know. Okay, thank you, Tom Lee. Okay, let's welcome Jeremy Siegel for further market analysis during this year's last trading month. He is an emeritus professor of finance at the Wharton School of Business, University of Pennsylvania. He is also WisdomTree's chief economist. I'm going to presume that you heard that exchange, but I'm not sure, Jeremy. Just based on what the market knows, what the market expects, and what we should expect from policy under the next Trump administration. How would you weigh in on this? Greetings, Becky. I am aware that Joe has been inquiring about the 10-year status. As you recall, the 10-year actually surged by over 20 basis points on Election Day. That, in my opinion, was a warning to Trump to exercise caution while implementing any tax reduction. The market will undoubtedly accept an extension of the 2017 tax cuts, in my opinion, but keep in mind that Trump made many more promises. As you mentioned, Becky, things really started to improve when Scott Bessent was essentially chosen to be the Secretary of Treasury due to his reputation as someone who takes a moderate approach to the deficit. I do not believe that the deficit is a short-term issue. However, I believe that the bond market would be under pressure if Trump fulfills all of his tax cut pledges, and I believe that relieving that strain began with Scott's nomination. Well, presumably also realizing that the market's response to, and using it as a type of report card or benchmark, is important to incoming President Trump. Of course, President Trump is the most active user of the stock market of any president. I also want to address Trump's latest tweet, if you want to call it that, regarding 100% tariffs on the BRIC nations in the event that they introduce a new currency. That really intrigues me because I believe that Bitcoin, which we all hear about, and that Trump strongly supports, poses the greatest challenge to the dollar's status as a reserve currency. Telling them, don't produce an alternative reserve currency, sounds a little odd given that Bitcoin is actually being discussed by several nations as a potential substitute to gold, with some of them switching from gold to Bitcoin. So, after we hear all the information, I'm a little interested to see how that will unfold. What are you anticipating, Jeremy? What do you anticipate happening? Do you think that because he will be concerned about how the stock market responds to this, some of his positions will be moderated, and as a result, you have an optimistic outlook on stocks? Yes, I am certain. I mean, I am aware that Tom, whom I greatly admire, is thinking about 5% more this month. It could be a little more difficult to reach 6,300 if we move the wonderful December to November due to his election, I wonder. After that, I believe Tom anticipates a pause. Although our valuations are high, they are not exceptional. Tell me if you require any further modifications.